night for you guys, an exciting presentation, and I'm going to introduce our trainer here in a second, but let me just tell you real quickly, I think the three things that you're going to get out of this. Number one, you're going to hear about some upcoming changes that affect you as a home business owner. Number two, you're going to learn some strategies that, I've seen this presentation, and quite frankly, I thought I knew all the different tax write-offs and all the different things that we should be using as home business owners, but I didn't. So you're going to learn some different things. You're going to learn some things that you are able to write off as a network marketer, as a home business owner that you didn't know before. And the third thing you're going to learn is you're going to learn about a software. It's actually a software that I have on my phone. I have an iPhone. It's a little app that actually makes it really, really easy for you to save money on taxes. And so it really is something I personally endorse, I do use. So you are going to learn some things, but you're also going to hear about a pretty cool software that I think you'll like. And the trainer, now when you go to learn about how to save money on taxes, there's a lot of trainers out there. There's a lot of people out there that are all of a sudden experts and know everything. But we have the guy. We have the absolute guy in the industry, the guy. He is a CPA and a tax attorney. He's been training millions of small businesses how to get their taxes down to the legal limit for over 30 years. He actually teaches tax reduction at Donald Trump and Tony Robbins Wealth Seminars, and is a best-selling author of the book, Lower Your Taxes Big Time. This is one of the very first books that I had exposure to years ago when I started in network marketing. And he's also has several other best-selling business books, including his very latest one, Achieve Financial Freedom Big Time. And he's a frequent guest tax expert on NBC, ABC, Fox, and CNN. He actually, years ago, he actually worked for the IRS training their corporate tax attorneys before he joined a Big Five accounting firm. After 3 years, he left that firm to start his own company. And his sole passion today is to educate small business people around the world on their huge tax breaks. So please help me welcome, pay attention, get your notepad out, take notes, because every minute you're on this webinar, you're saving money. I guarantee you that. So pay attention. Please help me welcome Sandy Botkin. Sandy, are you there?
I am. Well, thank you. God, you are great. That was just terrific.
Hey, I'm excited. I'm fired up.
Well, I got to tell you, folks, how honored I am to be participating with Ray and his group. I mean, this is just a real pleasure for me. All right, first of all, a couple things. Those of you who may have heard me before know that I'm a very content-oriented speaker. There's not a lot of fluff in what I do. So you might want to get some paper. You might want to get a pen, because we are going to move. Everything I'm going to say is a sort of a 30,000-foot overview that is in our videos and our blogs and many things that is located in TaxSpot. So we are going to move. Secondly, I am not a motivational speaker. When you think of a motivational speaker, usually you come out, you feel better as a result. That's why they call it motivational. In my case, it's the reverse. You're actually going to feel worse, because you're going to realize how much you probably overpaid over the years. In fact, it's funny, right? The number one comment that I get around the country, number one, is, where were you when I started my business X years ago? I must have gotten that 1,000 times or more. Now, also, I am not going to tell you a lot of jokes. That's not my main focus. I mean, we'll have a good time, but that's really not my focus. So if telling jokes is what's important to you, if that's how you evaluate a speaker, you probably want to hang up, because that's not what we're going to do. But if you will give me a focused 45 minutes, I will do several things for you. Number one, I will show you how to get your records in such a state so that you'll never have to worry about an IRS or Canada Revenue Agent audit for the rest of your life, because your records will be in great shape, and put enough money in your pocket to pay for your auto ship, plus a lot more, every month, every year, for the rest of your life. Fair enough? Because that's going to be my goal. Now, a little background about me. I'll give a quick Dun & Bradstreet version. I am a CPA. I'm a tax attorney. I'm a former trainer of IRS attorneys nationwide. So if you think of an IRS agent as a rat, I guess that makes me the head rodent. In fact, I'm president of the Tax Reduction Institute. I've been lecturing for over a quarter of a century, and I was one of the first lecturers to self-employed individuals. There were people like me who lectured to accountants, but very few actually started lecturing to the self-employed. That's where I really started that industry. And I made home-based business my specialty, actually. I'm a featured tax coach with Donald Trump at the Tony Robbins Wealth Seminars. I'm a best-selling author, as Ray noted, of Lower Your Taxes Big Time, and I have a new book, which is, I think, my best book ever, called Achieve Financial Freedom Big Time. I should have renamed that. Everything your CPA should have told you about finances, but they didn't. And I've been a guest expert on Fox, CNN, CBS, CNBC, and a whole bunch of other things. And I'm not covering this to impress you. I just want you to know I know what I'm talking about. All right? Now, first of all, I usually ask my audience a lot of questions. That's why I do seminars, and I'm not going to change my style because I'm on the phone. My first question is, where does your money go? And I ask that all the time. How much do you spend on entertainment? How much do you spend on taxes, on debt, and things like this? It's funny how many people don't know. Here's a chart that was developed by one of the big financial organizations. And it shows that the average person it pays out between 20 and 40% every month on debt. Now, debt of their paycheck. Now, debt includes all debt, mortgage debt, personal loans, consumer loans, car loans, everything. In addition, there's a day called Taxpayer Freedom Day, which is the day that the average person has to work to pay off their federal, state, and Social Security taxes. And if you go on the web, you'll find it's approximately April 19th. And by the way, it does vary depending on the state you're in or the province you're in and your income. It could be more. But if you take April 19th divided by 365, you'll find that the average person on this line pays about 30% of what they make in taxes. And as I said, it could be a lot more. It could be as high as 45%. And as I'll get into, next year it can be as high as 50%, actually 50.5%. So it can be pretty high. Well, if 30% goes out in taxes and 20% on the low end goes out in debt, well, that leaves 50% for everything else. Everything else includes food, clothing, retirement for yourself, education for your family, medical, dental, all those miscellaneous things, repairs, insurance. So if you wonder why you can't get ahead in this country, well, because half your money is committed between taxes and debt. That's why. And you got to live on the other half. And that is why almost every major financial planner and accountant will tell you, if you can save money in taxes, it can be a much earlier retirement. Now, there was one other very interesting study that was done by Harvard. It was a study done many years ago, and they wanted to know what percentage of the population can retire when they normally can receive Social Security. So let's say age 66, with the same standard of living they had before retirement. The answer is actually shocking. Here's the answer. It is 4%. 4% can retire with the same standard of living they had before retirement. That means that 96% of everyone listening and everyone in North America has to either reduce their standard of living, keep working, which is why you're seeing a lot of older workers working, by the way, or live on some form of charity. And I was just reading in the Washington Post, the post office announced that there were 3 people working at the post office age 98 or older. God, if I had to work till I was 98, that would be horrible. Also, by the way, I was in Miami Beach, Florida. I was reading in the paper there about elderly couples eating dog food. I'm not exaggerating. Jeez. In order to save money because they couldn't live on their retirement. How would you like to be in that top 4%? I promise, if you listen to me, I'll get you there. I really will. Now, here's another question. Let's say I gave you a choice between having a $17,000 raise, or that's each year for the next 10 years, or saving $10,000 in taxes each year for the next 10 years. Which would you pick? You probably pick the taxes because you know what this course is about. But that's the right answer. Because by the time, if I gave you a $17,000 raise, by the time you pay federal tax, state tax, Social Security, Medicare, and all these other things, you're left with less than $10,000. And that is why almost every accountant that I know will tell you that a smarter taxpayer is the wealthier taxpayer. Now, there was a very important slide that was started by a very wealthy, well-known individual. I find that one of the big differences between the multi-billionaires and multi-millionaires and the average person is the questions that they ask themselves. And this person asked himself a very interesting question. If I start off with $1, and my equity doubles every year, so I don't have to pay taxes, I'm just getting a doubling in my equity, how long would it take that $1 to be worth $1 million? So $1 at the end of the first year is worth $2. $2 at the end of the second year is worth $4. Well, if you run the numbers, you'll see it takes 20 years. But at the end of 20 years, it's worth $1,048,576. Now watch this. Same starting off with $1. Same doubling every year, same 20 years, but we're going to assume you spend 35% of each year's gain in taxes. And when you consider federal tax, state tax, capital gains, excise, sales tax, local taxes, 35% is not that high. So a dollar doubled isn't $2, it's $1.65 because 35% of that gain goes out in taxes. Now watch this. Same 20 years, how much do you think it's worth at the end of 20 years? I bet you won't guess. Here's your answer. Only $22,370. I'm going to circle this so you can see the difference.
Wow.
Now, why is there such a difference? You're only paying 35% in taxes. Here's your answer. Compounding. You're losing the interest on the money that you're giving the government. You know, Albert Einstein is attributed with saying compound interest is the eighth wonder of the world. It can work for you by getting your taxes down to the legal minimum, or it can work against you by overpaying your taxes. And I consider Albert Einstein to be a pretty sharp cookie. So the bottom line, and this is every financial planner will tell you this, it's never been how much money you make, it's always how much money you keep. You know, I live in a neighborhood, I'm sure many of you do too. Many of the houses are about the same price. Many of the incomes here are about the same. I know two people in the same situation. One lives like a king, and one can't figure out how to make ends meet on the same income because the first one plugged their tax holes. It's that much of a difference. You know, you may have heard Susie Orman is very famous. Susie Orman says debt is your #1 expense. She has a whole show on debt. And as famous as Susie Orman is, she's wrong. She is. The #1 expense in North America is taxes. It exceeds what most people pay for food, clothing, lodging, and transportation combined. That's why it's never been how much you make, it's how much you keep. Now let me ask you another question. Do you have a cash rebate card? And something that gives you points or gives you cash back? What do you get? You get points, you get 1% back, 2% back, maybe on a few things you get somewhere between 3 and 5%. What if you had a cash rebate card that gave you as much as 45% cash back? I'm not exaggerating. Minimum of 20 and as much as 45%. And actually next year, this is going up to about 50%. If you had a card like this, would you use it? Of course you would. I mean, you'd be absolutely brain dead not to use a card like this. Well, I have good news for you. You already have that card. It's your business card. Because if you're in business and you get a deduction, those deductions are equal to between 20 and 45%, depending on your tax bracket, savings on everything you can justify as a business expense. And as I mentioned, next year the tax rates are going up. It'll be somewhere between 25 and 50% savings. That's how good a deduction is. In fact, there's an old song we CPAs sing. You don't want to hear me sing, but the words are great. Everything is cheaper if you get a deduction. Cha-cha-cha. And we're talking 20 to 45% cheaper. And as I said, next year it'll be about 50% cheaper. And now this cashback card has a lot of benefits. First of all, you can deduct meals and entertainment, vehicle usage, home office. You can deduct the equivalent of your kids' college and weddings. I'm not exaggerating when I say that. You can deduct medical expenses, such as braces, as a business expense. How would you like to do that? Deduct travel, because you have no limitations on where you can get recruits. Income shifting, and much more. Now, all cashback cards have these pages of rules. This one only has 3. How's that? The first rule is that you got to run your business like a business and not like a hobby. Now, what does that mean? Well, that means you got to work your business regularly. I have a whole video on this and TaxBot on this, but let me give you some of the factors. Regular usage means at least 45 minutes to an hour a day, 4 to 5 days a week. It is much, much more important to show the government that you're working your business regularly than, say, once every 2 weeks for 12 hours. Business people, if they're not making money, they go attend seminars like this, or they go to ask people like Ray, or they go to their upline who is successful to find out what they do need to make money. They document what that person said, and they follow their advice. Hobbies do not. If business people generate financial statements, so if they're not making money, they take that financial statement into their accountant to figure out where they can cut back. Hobbies do not. Business people try and make a profit. They do everything they can to make money, whereas hobbies do not. Business people have good tax organizers. That's a very important point. Or good tax trackers. Hobbies do not. Business people have good tax records. That's the second point. You want to document your activities correctly. Business people do that. Hobbies tend to not to. Business people have a good tax tracker. Hobbies do not. And see, the government doesn't care if you're making money. Let me make sure everybody understands this. All they care about is you're trying to make money. That is the key. It's a very important key. Now, here's another interesting point. I don't know whether you realize this, but we have two tax systems in North America. And when I say that, most people say, oh, sure, one for rich and one for poor. And that's not quite right. There's one to make you poor, then there's one to make you rich. The one to make you poor are the employee staffs, the working staffs, because they are taxed on $1 and they get very little deductions. But if you're self-employed and you run your business like a business, you get all the deductions the employees get, plus you can write off part of your house, your spouse, the equivalent of your kids' education and weddings. You can set up a pension plan that I promise you makes any government plan look paltry by comparison. I mean, the tax benefits of being in business are enormous. And the reason for this is that the government passes good tax laws for small business. What they do is they give you deductions that other employees don't get that will create cash flows that you never have to pay back. And the reason for it is three reasons, actually. Jobs, jobs, and jobs. Small business generates over 70% of the job growth in North America. It's not IBM. It's not Microsoft or American Airlines. It's small businesses, people like you and I and Ray. And, you know, think about it. Apple Computer. You think Apple Computer started with 10,000 or 100,000 employees? Heck no. It started out of Steve Wozniak and Steve Jobs' garage. That's how it started. You think Microsoft started with 100,000 people? No, it didn't. It started small. And that's why the government passes good tax laws for small business. And I'm going to say something that's going to sound funny, but it really is true. The government, and this is both U.S. and Canada, is the biggest bookie in North America. And the reason is they will subsidize you while you're building your business. And the reason they do that is because when you make a profit and you start making money, they will get paid for the rest of your life. That sounds like a heck of a good investment to me. So it's even better than the GM subsidy, and that one was not too bad. And the way they subsidize you is this. Let's say your business generates a loss here in the U.S. That loss can be used against any form, or Canada. Same thing is true in Canada, by the way. That loss can be used against any form of income you have. Interest, dividends, wages, rents, pensions, anything. So let's take an example. Let's say you make $50,000 a year in a job. Your business generates a $10,000 loss. You only pay taxes on $40,000, the net. Now, let's say that loss exceeds your whole income for the year. You're a single parent. In the U.S., you can carry back all business losses 2 years and get a refund from the federal and, in most cases, state government for the last 2 years of taxes that you pay. You actually get a check. In Canada, you get a 3-year carryback. There's only Canadians here. Or you can carry forward, listen to this, all business losses in U.S. and Canada, I hope you're sitting down, up to 20 years and offset the next 20 years of earnings if you're self-employed. Think about that. So you never lose a properly documented business deduction. Now, here's another bunch of questions I want to ask you. A couple cash drain myth questions. First question, what's the difference in tax benefits between a brick-and-mortar business and a home-based business? Such as, let's say, a storefront versus a home-based business. Answer, none. They get the same benefits by the IRS and Canada Revenue Agency. Here's another big question. What's the difference if you operate your business full-time versus part-time? Answer, none. They are treated exactly the same by the government. Here's a third cash drain myth, and this one is only 7 words long, and yet it causes more people to lose money than almost any single myth in North America. And those 7 words are, my accountant takes care of my taxes. I have a similar myth. My spouse takes care of my taxes. If you learn anything, learn this. I equate this with a doctor taking care of our body. Wouldn't it be great if we can eat all the cholesterol and all the fattening foods, and once a year we go to a doctor's office and we get one of these Roto-Rooter jobs? Wouldn't it be nice? Another big myth, my mechanic takes care of my car. Those of you who have ever owned an older Jaguar would appreciate that myth. By the way, Jaguars are interesting. They were the only cars made in the world that had more vertical mileage than horizontal. Let you think about that one. Now, I was doing one of these big mega events with Donald Trump and General Schwarzkopf. Some of you may have seen me at these big events. And I had a guy come up to me and say, Mr. Botkin, I got to tell you, I loved your program, but you know what? I don't pay taxes because I get a refund every year, so I must be doing something right. He didn't realize he was getting back his own money. You know, I can't tell you how many people have said to me, I don't pay taxes because I got a refund. You know, I decided to do some research. All right, I got someone who makes $50,000 a year as a single individual, okay? On $50,000, this is net of all their exemptions, deductions, and so on, they are paying between federal, state, and Social Security $12,917 in tax. I'll put my arrow here so you can see it. Now, usually withholding or estimated tax is usually more than what you pay in taxes. Why? Because the government wants you to feel good. So even though this person got a $1,568 refund, they're still paying $12,917. 26% of their income went to the government on $50,000. And that doesn't count sales tax and excise tax. Okay? Here's somebody who makes $100,000 a year. 32% of his income goes to the government. And here's somebody who makes $250,000 a year. And this example, even though he got a refund, 38% of his income went to the government. And by the way, in 2013, these numbers are going up. Don't believe this nonsense that only the rich are paying more. Social Security is going up. The bottom tax rates are going up. Everyone is paying more. It's not just the rich. This is all happening. So this is becoming even more important to you. Now here's another study. Now, I'm not sure where I got the study, but it was a really interesting study. 84% of small business owners, I'm not sure why it's not showing up on here, overpay their taxes to an estimate of $150 billion, that's with a big, $1 billion a year. And here's something, based on my seminars, I would bet that over 90% of those people didn't think they overpaid. Now, why is that? Well, there's two reasons. One, lack of practical tools, and the second reason is lack of tax education. Let's face it, they don't teach you financial education in high school and college. There's a couple other reasons. Lack of practical tools, time-consuming, and extra paperwork. You know, you got to write things down, as I mentioned, to show you're in business in a tax tracker or tax organizer. Problem is, it's time-consuming. Takes extra paperwork. Procrastination is probably one of the biggest killers in deductions I can think of in the country. And a lot of times people say, oh, I'll do it. And you know what? They don't. Well, they wait a few days, and guess what happens? It doesn't happen. You know, when I'm at my seminars, I ask people, how many procrastinators do we have here? I get about maybe half the people raising their hands, and I turn to the other half, and I say, when are you going to raise your hand? Tomorrow? Now, lost and faded receipts. You know, I can't tell you. I'm sure Ray can appreciate this. I would go on seminars, and I put these receipts in my coat pocket, and of course I forget it's there sometimes. And then, of course, I dry clean the jacket, and guess what happened to the receipts? But it's even worse than that. I was, you know, a lot of these receipts now are on thermally treated paper, which fades within a year. And so if you don't have a receipt, you get no deductions. And the people in Katrina, people in New Orleans really learned this lesson. Let me share with you a really major story. You know, Katrina wiped out New Orleans many years ago. What you may not know is that a lot of those people, besides losing their home, also lost their receipts as a result of the flood. But the IRS electronically got notice of all their income. That gets sent to the IRS quarterly. So here they had to report all their income. The house was destroyed, and they get no deduction because they don't have receipts. If that's not a catastrophe, I don't know what is. And you're going to see the same thing happening in New York and Staten Island with Hurricane Sandy. They named the hurricane after me. Mileage logs are required for a car. And car's a big-ticket item, and yet they're a pain in the neck. You know, you got to show what the beginning odometer reading is, the ending odometer reading, the mileage, who you went to see, why you went to see him. Most people don't do that. And you don't know the rules, and therefore you're scared of an audit. Isn't that what happens? So what happens? You become conservative. You do the opposite of what Albert Einstein tells you to do. It's the worst thing you can do. Sound familiar? Probably does. Well, TaxSpot, I've been working on TaxSpot now for about 8 years. It is a fusion of tools and education. And you're going to find that this is a lot more than just an application. There's a lot of things in TaxSpot. The tools we'll talk about later. I want to first talk about the education. This is on-demand education for you and your team, 24 hours a day, 7 days a week, so that they can save thousands of dollars. And believe me, I got all kinds of testimonials every single year. There's over 80 tips. We have 40 videos of 3 to 5 minute videos. We have 260 blogs. If there's any Canadians on, you get my Canadian Tax Advantage of Home-Based Business. That's a special. It's a download. You get all kinds of things. This is a real educational component here. Now, one thing I want to note that's very important, you should never give tax advice to anyone unless you're an accountant or an attorney. So let us do it for you. And let me give you some examples that came out of the TaxBot videos. Strategy one, and this is all a 30,000-foot overview, by the way, of what's in TaxBot. There's a lot more in here. I'm just covering a few things. Is deduct your meals. First of all, who are your prospects? Who are people who are potential clients who can give you referrals or become customers? I think almost everybody, correct? So if everyone is a prospect, how can you have a non-deductible lunch with someone? You can't. And if you're not writing off almost every meal you have with someone, there's only one exception, that's usually your spouse. But if you're not doing this, you're losing thousands. And what you can write off in both U.S. and Canada is 50%. So 50% of your meal, and if you pay for your friend, 50% of their meal. Now, in addition, there is something called associated entertainment that's found in the Internal Revenue Code as well as in the Canadian Parliamentary Code. Now, I bet none of you ever heard the term associated entertainment. What I want you to do is I want you to write down the word associated entertainment. I want you to put an equal sign, and I want you to write down the word fun. Fun. See, we don't necessarily need better tax laws. We need better explanations. This is where you're going to a movie. This is where you're going to a play. This is where you're playing golf or going to a ballet. In U.S. and Canada, you can write off 50% of your fun as well as 50% of your friend's fun. And here's the rule. This is in the IRS regulations, by the way, in the Canadian regulations. It is not Sandy Botkin talking. This is in the regulations. IRS says that you can write off 50% of your fun as well as 50% of your friend's fun if you talk business in the same 24-hour day as the fun. Does that give you plenty of time? So let's take an example. Let's say that Ray and I would go to a football game, and we talk business in the car, and I have an intent to talk business while we're doing that, and then we go to the game. Is that talking business within the same 24-hour day? Yes. Let's say that Ray and I have lunch, and I say, Ray, let's say Ray says to me, Sandy, it's such a beautiful day. What do you say we go play golf? And I say, well, all right, I don't play that much, but if you show me how to play, I'll go. I might have a 300 handicap, but I'm going. Is that talking business within the same 24-hour day? Yes. Now, here's the problem. Who has the burden of, by the way, I want to emphasize how good this is. You can literally, remember I said there are good tax laws? You can literally eat away your taxes or golf or play away your taxes. Literally. There's no limit. Now, the problem is, how do you prove to the government that you're talking business? Is the same 24-hour day? Does the government, first of all, does the government have that burden, or do you? We do. And how do we prove it? From our tax organizer or tax tracker. Everything revolves around our tax tracker. Everything. Here's an ideal tax tracker that I was recommending to people for many years. What's good about it is that it eliminates procrastination because it has all the tax questions that both the IRS and Canada Revenue Agency requires. So you fill it out, and you never have to worry about an audit again. And I've gotten hundreds and hundreds of letters, probably thousands of testimonials by now, on people who've used this, and the government just walks away and lets them have every dime of deduction. And what's good about this, as I said, it eliminates procrastination. So, for example, who? Nick and Carol Hillman. What? That's the second thing you need to write down. What was a meal? Was it a business gift? What is it? Where? In this case, I went to the Palm Restaurant, and we went to the Ford's Theater to have fun. When? The date happens to be on the diary. It just didn't show up on the photograph. Why? Be specific. I asked for a referral, and they even gave me the name of Johnson. And finally, how much? $200. Who, what, when, where, why, how much? If you do this, and you have something triggering you to do it, that's the important point, you will never have to worry about an audit again. You will have that peace of mind of not worrying about an audit again because your records will be imperfect. The problem is you got to have something triggering you to do this. Think of it like an alarm clock. If you don't have an alarm waking you up, you might oversleep and not go to work. Here, you got to have something triggering you to do this every day, and then you won't have to worry about an IRS audit. You might say a minute a day, less than that, will keep IRS away. Now, if you don't have the right records, then you're in jeopardy of an audit and of not maximizing your deductions and being hit with a 75% civil fraud penalty. I am not kidding here. This is not something that's nice to do. It's something that's a must. You really got to get this right for your business. And by the way, lost and faded receipts are a huge problem. You don't have them, you don't get any deductions. So a lot of people think, well, what about credit card statements? Won't they work? IRS agents, I can speak for them, really love people who think that way. Because think again, you need more information than the card provides. And even more scary, next year, IRS got a $900 million increase. I think it's $980 million increase in their budget. They have announced they're going to be hiring 16,000 new IRS agents. And it says 2012 here, but it's really 2013. Are your records ready? Does that sound scary? Well, the good news is by the end of this presentation, you will have more peace of mind that you can withstand an audit and more cash in your pocket. I promise. All right, strategy 2, deduct vehicle. You know, most people think that a home office is the #1 audited area, and that is not true. The #1 audited area is car. Why? It's a big ticket item, it's the most used, and it's the most abused. And I got to tell you something, I feel sorry for home-based business owners in many cases, especially network marketers, because they're not doing it right. Imagine throwing $1 out the window every 2 miles you drive, or every 2 kilometers if you're up in Canada. Try that sometime. Drive to work, take $1, and throw it out of your billfold every 2 miles. Because when you don't have the right documentation, that's what it's costing you. And in fact, if you know what you're doing here, you can generate enough deductions just from the car to basically pay for your entire gas. How would you like to pay nothing for gas? Zero. Gas is what, $3.50 a gallon now, $3.30 a gallon? Imagine paying zero. Well, you can generate more than enough from documenting your car to probably pay for all your gas for the whole year, just from the car. My question to you is, how are you documenting your mileage? Are you using paper and pencil, using the guess technique? Now, there are 2 methods of writing off a car. There's the actual method, and there's the government method. Now, the actual method is where you take a percentage of your business use. That's the percentage of your gas, oil, insurance, wash, wax, depreciation, repairs, and so on. So let's say you put on total miles of 40,000 miles. You drive 20,000 miles for business. Notice that's not based on months. It's based on business miles to total miles. So if you bought a car this year, there's not much left to it. You even know that if you use it at 50% for business, 50% of this year's gasoline for that car is deductible, 50% of the insurance, 50% of the repairs, and so on. And how do you prove what your business use is? Your tax tracker. You know, a lot of times people ask me, they say, will IRS believe everything I say in my tax tracker? Yes, they have to by regulations. You know, all of you have probably homeowners insurance. Why? You probably haven't used it that much because if your house burns down and you have a tornado and you don't have one, it's a disaster. You probably have auto insurance. You might have used that a couple times, but not that often. Why? Because you get into a big accident, it's a catastrophe without it. This is audit insurance. If you don't have this, the government can close you down with all the penalties, and I've seen that time and again. How would you like to have your business closed down? But by having a tax tracker, which is very cheap insurance, it will prevent closing down, and unlike homeowners, and unlike auto, it will pay you every single year, year after year, forever. Now, that's the actual method. Let's talk about the IRS or the government method. In the United States, IRS gives you this year 55.5 cents a mile. This is going up 1 penny next year, by the way. 55.5 cents a mile for every mile you drive for business. They give you 23 cents for medical and moving. Every time you go to the dentist, every time you move to another city, you should be claiming 23 cents a mile. Many people miss this, that medical deduction. And here's one that a lot of people miss. I think almost everybody, and that's charity. The government gives you 14 cents a mile for every mile you drive for charity. I just met somebody who's on his church choir. He goes several times a week and practices. He should be claiming 14 cents a mile round trip. We have a lot of moms who drive their daughters selling Girl Scout cookies here. They must know I like Samoas. And the mom should be claiming 14 cents a mile. Many people miss this. In Canada, this year you get 53 cents a kilometer on the first 5,000 kilometers and 47 cents a kilometer for anything over 5,000 business kilometers. So let's take an example. You drive 10,000 miles for business at 55.5 cents a mile, you get a $5,550 deduction. Now, by the way, I want you to notice something. It didn't matter whether you bought your car new or used, whether you had 0 miles on the car or 50,000 miles on the car. IRS still gives you 55.5 cents a mile. Well, if it doesn't matter, then it should make sense to you that the cheaper the car, the better the deal. And we actually ran the numbers. We found that the IRS method is generally better if you drive over 20 to 22,000 miles a year or more, and the car costs you less than $19,000. Now, as you start getting into more expensive cars, like $25,000, $30,000, then the IRS method isn't that good. But if the car costs you less than $19,000, you drive over 22,000 miles a year, and then you're usually better off with the IRS method unless you have a lot of repairs. Then it's another story. And by the way, one thing I want to emphasize that's not on this, but I want to give it to you, The IRS method, a lot of accountants don't know this, is in lieu of gas, oil, repairs, insurance, wash, wax, depreciation, but you do get interest and a deduction for sales tax as a business expense to the extent you used your car for business. So if you used your car 80% for business, 80% of this year's interest is deductible. 80% of the sales tax is deductible, even if you use the IRS method. This has been around for years. If your accountant did not give you this as a business expense, you can file amended tax returns for up to 3 years and get those deductions. I know someone who got over $6,000 back from the government. This is a big deal, folks. This is a very big deal. Here's a nice tip. You know, there's a lot of personal trips that aren't deductible, like seeing your mom, taking your kids tutoring, football lessons, doctor, things like that. But how about if you have a personal trip, like you want to see your mom, you ask yourself, well, do I have a client or a distributor or a potential prospect I need to visit? Or maybe an opportunity meeting? And the answer is you can therefore write off a significant portion of the trip. In fact, if the opportunity meeting or the client is on the way or just past your mom, right near your mom, that's all deductible, even though you went to see your mom. Strategy 3, home office. Now, you probably heard a home office deduction isn't worth it, and if you use it, you're going to get audited. Well, let me tell you, I am here to tell you that if you don't have a home office deduction, you are crazy. In fact, in 1999, Congress liberalized the home office rules, particularly for home-based business owners. So as I'm saying, if you don't claim it, you are crazy if you're eligible. So how do the home office rules work? Let's assume this is your house and use it 1/8 for one bedroom for business, and we're going to assume that 1/8 of that house, 1/8 of the square footage is used for business. And that may be more, that may be less. I'm just picking a number, okay? Now, what does that mean? Then 1/8 of the utilities become deductible. Now, notice this. Utilities aren't deductible. But by having 1/8, by claiming a home office, now some of those utilities are deductible as a business expense. 1/8 of the interest becomes business interest, which will reduce your Social Security. You Canadians, you can't even deduct interest, so this is a way of getting some deduction for your interest. 1/8 of the property taxes become business taxes. 1/8 of the house can be depreciated. A lot of times people ask me, well, if I rent an apartment, can I deduct the rent of a home office? Yes. In this example, if you rented this house, 1/8 of the rent would be deductible. 1/8 of the maid service, the alarm service, the repairs. I'm hearing some noise in the background here. Hopefully I will put it on mute. So how do you claim a home office deduction? To claim a home office deduction, first of all, you got to meet 3 rules. Rule number 1 is you got to use an exclusive portion of a room for business. Now, how do you prove you're using, it doesn't have to be a whole room, it just could be an exclusive portion of a room. Now, how do you prove that you're using a room exclusively for business 2 years ago? I bet your accountant never told you. Here's your answer. Take a picture. Take a picture of the home office. Date the photograph. And whatever you do, don't send the photograph into the government with your tax return. I know someone who did that, and in the photograph, he was making some undesirable hand and arm gestures. I thought it was funny. But the IRS, not everyone at the IRS has a sense of humor. So you want to take a photograph once a year, you want to date it, and keep it with your files. Secondly, you want to use a room regularly for business. Now, regular usage means at least 45 minutes a day, 4 to 5 days a week. And I'd say it's closer to an hour now. An hour a day, 4 to 5 days a week. And this is very important. It's important to work it that way because, 1, it helps with your home office deduction, but it also helps in establishing that you're in business and not a hobby. And the third test is that you must use your home as your principal place of business. Now, what that means is you meet 2 parts. You don't have another office where you do any administrative work for that business. And for most people, for most home-based business owners, that's a chip shot. That's easy. And you do the majority of your management or administrative work from your home for this office, which is the case. So really, you probably meet test 3 easily. All you have to do is take a picture once a year. And by the way, get those cookbooks out of the bookshelf. Exclusive means exclusive. Work your business at least 45 minutes to an hour or more a day, and you should be in great shape. So basically, as long as you do the administrative work from your home and you have no other office where you do the administrative work and you meet the other 2 tests, you have a legitimate home office deduction. Now, to get an idea of how much this is worth, let's assume you pay $2,500 a month, either in mortgage payments or in rent. And I know some of you pay less and some pay more. I'm just picking a number. On that $2,500, we'll assume 1/8 of their square footage is a home office. So 1/8 of that $2,500 is $312.50 a month in your pocket. Two, we're going to assume you drive 200 miles a month for your business. That's about 7 miles a day, folks. That's not too much here. I don't think that's too aggressive. At the IRS's 55.5 cents a mile, that's only $110. And number three, we're going to assume you spend $300 a month on entertainment and meals. I got to tell you, I was in Las Vegas. I spent that on one show. And I'm sure there are people on the line that probably spend that in a Saturday night. Now, in both U.S. and Canada, you can deduct 50% of that, or $150 of this. Well, so these are conservative numbers. I just want to emphasize it. Usually it's probably more than this. Well, if you add up these three numbers, they come out to be $572.50. Now, you all remember when I said the average person in North America pays about 30% or so in taxes? This translates, $572.50 in deductions translates to about $200 in your pocket every year for the rest of your life. And this is only, by the way, 3 deductions, and for 1 month alone. In the home office area alone, there's probably 8 or 10 deductions. In TaxPal, I talk about 200 of them. This is just a couple deductions. Would this pay for your auto ship alone? This is just based on the tax benefits. I'm not even talking about income. This is just the tax benefits here. I mean, this is just tremendous. Knowing about taxes can really make a difference in many ways to your lifestyle and to your attrition. Can everybody see that? Now, do you all remember when I said 84% of small business owners overpay their taxes to the tune of $150 billion a year, and over 90% didn't think they overpay? And why was that? Well, lack of education and tools. You know, you have to have a tax diary or a tax tracker, but, you know, it's time-consuming, extra paperwork. Procrastination is a huge killer of deductions. Lost and faded receipts are a big problem. Mileage logs, which are absolutely essential, but they're a pain in the neck. And you don't know the rules. So what happens? You're scared of an audit. You become nervous, so you become conservative. You do the opposite of what Albert Einstein says. Sound familiar? What if you had a robot to help you track your business mileage for you, instantly record deductions, automatically store all your receipts so you never have to lose them, give you tax tips and strategies in easy-to-understand language, back up all your deduction records in case of a loss like that flood or a tornado, audit-proof your records with simple-to-answer questions so you never have to worry about even the smartest auditor, motivate you to maximize your tax deductions, prepare reports for your accountant so you don't have to, and help you grow your business. And if this isn't enough, what if I also guaranteed you, because we've seen this in the hundreds and hundreds of people, to save thousands of dollars a year in under 2 minutes a day? And this is why Ray likes this. Let me introduce you to something that I have been working on for years. It is called TaxBot. It works on the iPhone, it works on the iPad, the Android, the Droid tablet, it even works on the web. The only thing it doesn't work on is the BlackBerry. It's a 2-button system. Let me introduce you to one-touch tax relief. It'll reduce your business taxes by thousands of dollars. It'll simplify your record keeping. It will safely bulletproof yourself against an IRS or Canada Revenue Agent audit, even the smartest auditor. In fact, we even have a ruling on this about electronic documentation. And give yourself freedom. It will also instantly store receipts. You snap photos of the receipts, it will automatically upload it through the web, answer simple questions, and bulletproof you against an audit. And as I mentioned, all records are documented in accordance with IRS and Canada Revenue Agent standards to ensure you are bulletproof on an audit. And the way it works is you answer simple questions. You just press one of 2 buttons, expense or mileage, and you'll get a whole list of categories. All of these are editable and customizable. That's why I emphasize that. It's all customizable. So let's say I have a meal. I press meal. Here's what you see. For the meals, for what is the meals? For the business purpose. Why? It's right there. You just type it in. How much? You put the total in. If you have an iPhone, you can even do this by voice. Where? You put in, I went to Outback Steakhouse, or I went to Greasy Lloyd's. The date is automatically in there, and who is right there. Now, what's interesting, here are the 6 questions. By doing this, you'll never have to worry about an audit again. And what about receipts? It has an integrated scanner with this. So you press attach receipts, you'll see a camera, you take a picture of the receipt, you automatically save it, Request save. It will upload with the documentation onto the web wirelessly wherever you have internet. Now, what about mileage? We did something really cool. It has an integrated mileage tracker with a GPS system. This is what took so long for me to develop. Watch this. This looks like a GPS map. You press start mileage tracking. Now the middle is what your map will look like. The minute you get to your destination, you press stop. And what you see on the right is what is going to happen. It'll automatically put the mileage or the kilometers. It'll automatically put the address where you started from, by the way. It'll automatically enter the ending address where you stopped TaxBot. It'll automatically put the date. If you want it as a round trip, you can leave that on, or you can switch it for one way. Or you type in. The only thing you need to type in is why. I went to see a prospect for income opportunity, or I talked about the new product, or I talked about sales call, or I talked whatever, something specific. And now you are bulletproof. You have bulletproofed your car. And by the way, TaxBot also has something very cool that was given to us by one of the leaders. In the front of TaxBot, in real time, shows you how much you are saving in new deductions. And this is why is this important? Because new reps, when they see how much they're saving, they can't afford to quit. Like this one generated $15,068 in my iPhone as of August 20th. You think somebody's going to quit seeing this? There's no way. Every major leader I have run into is recommending to their downline to do this. Every single one. And by doing that, they have these weekly calls or monthly calls, and they go over how much they've saved in deductions. And I got to tell you something, they're finding a 30% reduction in their attrition. How's that? Now, in addition to all of this, you also get eliminate paperwork and save tons of time. And you get a secure web portal in the cloud. You track it, we store it. The records are stored with bank-level security according to IRS standards and Canada Revenue Agent standards. You edit the records and download reports. Everything is fully customizable. Let me emphasize that. So you can go back to the beginning of the year and put the things into TaxBot. And you never have to worry about an IRS audit again or losing the information. By the way, starting at the end of January, we're going to have an update. TaxBot is going to include one account we call it credit card integration. You can take one credit card or a bank account, whichever one you want. If you want, you can add more to it, but you get one with the program. And the way it works is, let's assume you have credit cards used for business. Now, that's not in TaxBot. What the bank is going to do is they're going to look at all these charges. They're going to look at what you put in TaxBot, and then they're going to send you an email. Listen to this. That says, these expenses aren't in TaxBot. Do you want to add them? All you have to do is click a box. Yeah, this is business, this is business, this is not business, and it will add all the business expenses to TaxBot that you want. If you want to add personal, you can do that too, and do it as a budget, and it will keep track of it as a personal expense. How's that? So things you might have left out will be put into TaxBot. The bottom line is that your records, your mileage expenses are all stored securely in a dynamic web portal that will integrate with your current record keeping and appointment tools. And as I said, you can also use this as a budget. And by the way, one thing about TaxBot is that it's kind of like a BMW. There's more under the hood than it looks. Most companies will tell you they store records. We store it in several different locations in several different cities. Okay? Now, in addition to all of this, if this isn't enough, you also get me. You get my tax training on demand. You get 40 videos. Each one is 3 to 5 minutes on a whole variety of topics, not just tax, financial too, by the way. Over 260 blogs on a wide variety of areas. Like I did one topic on how to get in-state tuition for an out-of-state student in most state schools. I mean, I have all kinds of other blogs, things that are going on year-end tax planning, which is something really important for this year. What's going on for 2013 and how you can plan for that. I mean, I have all kinds of things. The point is, with one touch, you get the tax, you get the expense tracker, you get the integrated mileage tracker, you get the scanner for your receipts, you get me. Oh, plus you will get the credit card integration at the end of January, beginning of February. You get me, and you get the storage, bank-level security storage of all your data. So let me tell you, this is more than just an app. So how do you use TaxBot? How do you recruit, retain, and make money? Number one, you get signed up with TaxBot today. Do not procrastinate. Number two, start saving thousands of dollars yourself, and then show all your recruits and your downline and your prospects why they can't afford to quit. Let me share with you a couple of testimonials that we had on one convention that we went to. These are people, this is what they had on their phone. And I have the actual name, none of this MJ from so-and-so. You actually see who this is. Mandy Johnson from McMinnville, Tennessee, in 3 months generated $7,095 on her TaxBot. 3 months. There's a couple, Priscilla and Shakir Sutton, in 3 months generated $7,528. Here's a guy, Billy Richard, $15,122 in 6 months from Orlando, Florida. That's my favorite. No wonder this guy's smiling. David Hickson, $42,759. No kidding. In 5 months, by the way. You know, you can spend 2 minutes a day complaining about your taxes, which you're probably doing now, and not working. Or the same 2 minutes a day, reducing them. One will cost you aggravation and money. The other will make you a lot of cash and bring you peace of mind. You know, you can complain about taxes, you can overpay your taxes, you can worry about an audit, you can do tedious record keeping, spend 2 minutes a day trying it and it's not working, or on the same time you're putting in now, you can, and probably less time, you can lower your taxes, save thousands and thousands of dollars every year, stay audit proof from even the smartest auditor with easy record keeping. I mean, that's a no-brainer to me. Now, the benefits to you as a distributor, well, there's many. First of all, increased retention. That's one huge benefit. Secondly, incredibly easy documentation. Let me tell you something. I am not a documentation nut. I do it because it saves me money, and I know how important it is. But I don't like it. But if I can do it simple and easy, that I can do. You get a business in a box. You know, there's a lot of network marketing companies out there. If you can offer a unique selling opportunity here that nobody else has or very few people have, you really offer something that stands out. Does that make sense? You can save thousands, and you will save thousands of dollars on your taxes by using it. Imagine how that feels. Not to mention bulletproof your records. You'll take your business seriously. And by the way, by taking it seriously, you think that maybe your downline will take it more seriously? Bulletproof your records in case of an audit. More apparent cash flow quicker because the reps see how much they're going to lose if they quit. Help get support from your spouse. This is a big one. You ever have a situation where you make a presentation and the person likes it and they go home and their spouse says, "You did what?" Here, you get the spouse on board because they can take the deductions too. They can go golfing and write that off. They can eat meals, go out and entertain for your business. Stronger proof you're in business and not a hobby. That's very important. And customized reports to help you achieve your financial goals. These are all downloadable. You can even save them on a memory drive, a memory disk for your accountant. TaxBot is normally $19.99 a month, but you know Ray beat us up because the amount of people here. It's only $9.99 a month for all of this. That's it. It's not one of these trial deals and you'll go up. This is it. Okay? It's $9.99 a month. And by the way, it's not even $9.99. Why not? Because you're getting that 45% rebate. It's deductible. So it's only costing you $5.50 a month after taxes. What's that, 18 cents a day for this? That's not bad after tax. In fact, I'm so confident you're going to love this that we offer you this promise, like an insurance policy. If you don't accrue deductions worth 20 times your investment in the first 30 days, simply call and cancel for a full refund. 20 times. What's that, 2,000% rate of return? Okay? 2,000% rate of return. Where are you getting that guaranteed to you? You're not going to find anything better than this, I promise. In fact, even better, to take advantage of it, go to rayhigdon.com/TaxBot. That's rayhigdon.com/TaxBot. Now, this is not available forever. There is a time limit on here because this compromises my pricing. So you want to do this as soon as possible. And don't forget, you get the guarantee that if you don't like it, if you're not putting 20 times in your pocket new deductions, and by the way, you're going to average about 50 to 60 times, but we're guaranteeing 20, okay? And by the way, here's a way to get it for free. There's a special bonus. If you sign up today, we will send you a link to share TaxBot with your friends. For everyone you refer, we will give you a free month. We know someone who's signed up who's 2 years ahead. he's got 2 years paid off.
That's awesome.
Take advantage of it. Go to rayhigdon.com/TaxBot. I promise you, this is going to pay for everything you do in Christmas, all the year-end gifts and Hanukkah, all of that stuff. This is going to easily pay for itself. Hopefully I've convinced you of the horrible mistake of overpaying your taxes, and I apologize to anyone who doesn't get this because you're going to pay a lot more than anybody else who does.
Yeah.
And as I said, you're going to generate enough deductions to basically pay for all your gas, all your auto ship, and more for the rest of your life, and that's pretty good. Okay, Ray, I'm going to turn this back to you.
Absolutely. Thank you so much. Hey, raise your hand if you learned something tonight. Let me see some hands. I know I took some notes. I'm seeing lots of hands there. This is something you don't have to hard sell. I mean, it's a no-brainer. And there's things out there that we invest in ourselves. We buy training, we buy education that we hope impacts the bottom line, that we hope makes us money, of course, and some do, some doesn't. This is just a no-brainer. I mean, this is something that I use, and I'll tell you, one of the first things that I did when I got it is I quickly went through my stack of fading receipts, and I took pictures of them and loaded them into TaxSpot, and then threw them away because that's pretty cool. And I don't know about you, but I hate leaving stuff around. I hate these receipts here and there or in boxes and stuff. And it really is. It is something that I have been using for quite a while, and it's something I definitely endorse. So if the only question here is if you're in business, get this. I mean that's the only question. If you're a W-2 employee, I guess you don't have any write-offs, so why are you on here? But if you have a business of any way, shape, or form, you really need to get this. And it was an important fact, and I hope you guys paid attention, that the IRS is bringing in 16,000 new warm and fuzzy friendly IRS agents just for your convenience. And you better have your documentation. I'm not a documentation guy. I'm not someone that does a lot of detailed, nitty-gritty kind of stuff. You can't skimp on taxes. You can't. There's one big boy you can't mess with, and that's the IRS. So I appreciate you, Sandy. Appreciate you taking your time with us. And, rayhigdon.com/TaxSpot. I have it. You should have it if you're a business owner. And again, appreciate you, Sandy.
My pleasure.
All right, guys. Well, have an awesome night, and we will talk to you all soon. Enjoy your app and download it tonight. Bye-bye.
The organizer has ended the session.